Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for our next topic, building a stock portfolio. I'm your host, Kevin Horner. I am, of course, joining you from Denver, Colorado. Today, pleased to be joined by my friend and fellow coach, Connie Hill, in the chat. Certainly can say hey to Connie and also post in the chat for us comments and questions you would like to see addressed in today's conversation. Connie will get to stuff that I'm unable to, but in a solo session like this, it's very important for me to be able to engage with all of you, bring your questions and comments that are at least pertinent to the topic into the discussion, and I'm more than happy to do that. So please feel free to post in there for the duration of our show. We'll go about 45 minutes in total until about quarter past the next hour. If you're not already doing so, please follow Connie and me on X. We try to post for you there throughout the week. Connie is at Connie Hill CS, and I'm available Kevin Horner CS. We do want to highlight what we offer for you there because it's the best way to engage with us coaches when we aren't offering these classes for you here on the channel. So this week, I've been posting a lot about some of the charts I'm running across, stocks that may have tested support, stocks that might be in the process of breaking out, groups that might be providing some breakouts and potentially leadership, which, if you're new here, is exactly what this particular class is about. So we, yes, are speaking about building and buying underlying equities to build a stock portfolio, but part of that process is understanding where we are in terms of the individual sectors, who's giving us leadership in the broad market, which sectors of those 11 are our laggers, which ones do we not necessarily want to participate with, and why. So I'm going to try and bring all of this together for you today. So we will set the table with a brief review of the broad market, and then we will move into sectors, relationships, understanding which of those are providing that leadership, and then scanning those leadership groups for potential opportunities. And of course, in a class like this, where we are maintaining a portfolio of underlying stock, it's important that we continue to discuss the example portfolio. So we will take a look at the current 3 positions we've maintained, all of which are held with an exit strategy employed, and we're going to talk about the potential to elevate those exit strategies based on recent price movements to the upside. So plenty to cover for you here in today's session. But before we do, we got to read the disclosure. So let me get to those for you. First, remember that our conversation is fully informational and educational. Simply put, we do not make recommendations here. We do not endorse a specific approach to trading. We do discuss technical analysis here in this class. And what we will likely do is bring those concepts and strategies into the discussion as we evaluate the various charts we're going to look at. Now, remember, technical analysis is just one of your decision-making pieces. It is not the entirety of it, and we discourage you from basing your decisions exclusively off technicals. Now, in this class, we won't commonly get to utilization of options, but you do need to know, nonetheless, that options carry a higher level of risk and are not appropriate for all investors. We want to make sure that you're familiar with those risks, and in the instance that we bring options to the discussion here, I'll also try to provide a little heavier discussion around the risks associated with those options. So we will disclose those or disclaim that on the fly. Now, let's get to that look at the broad market, how we finished up here today. We've got the S&P 500 in here. And what I found notable about today's price action, and really the price action of the last week, twofold. Number one, we have still not managed to close over that important 7,000 level, but as you can see, we did make that new high about a week ago, 7,228 on an intraday basis, but we have not closed over there, over that level. In fact, I think our high close has been about 69.85 or so. High close 69, yeah, still 85, 69.88. So, we did have 7,002 at the high close, excuse me. So we did get it, but we've not held it. And so 7,000 continues to stand out as a very important level because, one, it's a psychological level, right? 7,000, a nice round figure. Earlier in 2025, there was a lot of discussion about, can we get through 6,500 and potentially target 7? Well, here we are a month into 2026, and we have seen 7,000. But as Jay is pointing out, perhaps we are kind of spinning our wheels up here, aren't we? Yes, we do have a few higher lows. Okay, we can point to this one, followed by this low, which is higher than the last, followed by this, which is higher than the last. And some of you bulls are going to say, Kev, there's nothing wrong here. Everything we've seen in the last week validates the trend, and you'd be hard-pressed to deny that simply because we've seen some tails in here, right? Today we traded down to the 50-day, bought that up. Yesterday we tried, 2 days prior, tried that same thing on Friday, down, finished above the 20-day. Last week here on the 29th, had a very big intraday move and finished favorably. So some of you traders are just going to point out the fact that we've maintained the 50-day, and you would not be wrong for pointing that out. The question is whether we can actually push to and maintain above 7,000, or if we are going to simply meander sideways in here. One other note as it relates to the S&P, I'm going to call out the fact that we do still have a bit of a downtrend in here with our RSI, don't we? So the RSI is telling us that we are not getting real directional shift just yet. And this the level we had just moved to with this new high is divergent versus the RSI. So no, it is not as strong, and that does not imply reversal is imminent. It does maybe imply that there is a pause in the strength of the trend. We could take that viewpoint here, but in terms of breaking down, price action has not dictated as of yet that traders should be lightening positions. Now, if the trader is feeling uncomfortable, maybe they're overexposed at this elevated level, maybe you've got too many dollars on the table, those traders might be wise simply to put themselves in a point of comfort regardless, just because it's unclear up here. But you've not, as of yet, had that breakdown below the 50-day. And even that stated, yes, we did have it here for 1 day and here for 1 day. Some of you might look at this and state that you need a series of closes below the 50-day. So this is something we're going to have to monitor, right? So the 50-day today is 68.70. A close under 68.70 would be notable for the S&P 500. Now, let's take a peek at the NASDAQ. Well, we have tried. Here we had this pop right up here. We basically made a lower high because of my bubble highlights the fact that the highest trade we've had here was right back here on about October 28, 29. And we rallied into it, but did not make a higher high, right? We basically made a very slightly lower high or a matching high. And then we've been beaten back again here. Now, we shouldn't be surprised by the pushback because a lot of the pushback has been tied directly to the obvious rotation we're seeing from the sectors. Our laggers, our technology, heavily weighted in the NDX, the NASDAQ 100, right? So a very big allocation in the NASDAQ is to technology. And as technology goes, it's likely the NASDAQ 100 is apt to go. And what we notice here is a lot of the same stuff. Unfortunately, some bearish behavior from the RSI yet again. And what I mean by that is that we are finding resistance to be with the RSI between 55 and 60, which tells us that because we are incapable of pushing into the true overbought condition that most would rely on relative to the RSI, that being a level over 70, well, then we are seeing bearish behavior, generically speaking. So what that means is that for traders who are looking to utilize the RSI as some semblance of a signal to act, then what they are looking for is rallies into the 55 to 60 zone being considered overbought conditions. And then as the RSI rolls over from that elevation to 55 to 60, they then might take action by selling off longs or perhaps establishing bearish trades from there. But the point is that if we can't get the RSI into traditional overbought territory, well, then we'd consider what we're getting out of it for the better part of the last 3 months to be, unfortunately, neutral to bearish rather than neutral to bullish. So this stands out. White uptrend line still maintained, but obviously we've got some earnings after the bell today that could play into that. We will be hearing from AMD and certainly could have an impact not just on the NASDAQ 100, but obviously the Russell 2000, or excuse me, the S&P 500. But more importantly, the question really is, does AMD's commentary maybe lead us towards selling off counterparts, right? Not just AMD specific, which has a small footprint relative to the S&P, larger footprint relative to the NDX, but really can the conversation around AMD expand to include the rest of the broader market, more specifically technology? So if it's good and tech is carried or buoyed by AMD's report, well, then we could be happy going forward for the next few days and weeks, but we are at a bit of a precarious spot, I have to admit. We are below the 50-day on a close today. Again, we've been below it a number of times in the last few months, so let's not, we're not going to overreact to it, but we do need to make note of it. Now, I thought for many portion of today's action that the Russell was going to be our leader. Well, it finished as our leader for the day of the major indices, up 0.3%. And it closed pretty darn close to the 20-day. Let's zoom in here. So we've got a doji, or a spinning top, really essentially right at what could be considered resistance, right? We're below the 20-day for 1 day, 2 day, 3 solid days. And then today's finish is at 26.48, and our 20-day today is at 26.46. So 2 points above it for the close. Now, some traders would say that that is sufficient. It's above it at the close. That's a close above the 20-day. We could be right back in gear. It is not above the low of the high day, I don't think. Our high here is 26.48.27, and today's close is 26.48.49. So I guess to the letter of the law, we do have a hold if we are calling the Friday low the low in our pullback. However, one final note as it relates to this candle. This is often considered a sign of indecision. We shouldn't be surprised that it happened at the 20-day, an area that could be considered potential resistance. And I find that to be kind of notable. It means for a lot of traders, tomorrow will dictate potentially the next move. Do we get that move that takes us higher through with conviction through the high we made on Friday, or do we get pushed back to the trend line, potentially even pushed back to the 50-day moving average, which would still be supportive based on what we've seen here? Remember, the last time we were at the 50 on the Russell was right here, and we moved quite nicely, as a matter of fact. And when we tested the 50-day, we made that push, 10.5%. Not bad. So if we have to test the 50 again, it's an area where traders may look to deploy some new funds. Okay, so there's your big three. Now, why do we look at it as such? Well, we need to take the next step, look at our sector moves, and see if our leadership still holds. So on a year-to-date basis, our leaders, energy, materials, staples, industrials, in order. Today, leadership, energy, materials, staples, and utilities. Oh, there's industrials, just a small tick behind. But we've seen a lot of the same stuff, everyone. So the reminder I'm here to offer is that markets change week to week, month to month, year to year. 23, 24, 25. Big, heavy tech moves, big moves in the S&P, big moves in the NASDAQ 100. This market, fairly different. Leadership has changed, not to suggest that it's going to stay the course for the rest of the year. But when we look at the way that technology has acted, let's go ahead and put the technology space in my chart. You can see that we are encroaching upon an area that could be considered to be support, but we're going to need a catalyst, and it could very well be earnings detail. It also could be that the whole space just needed this unwind that we're in the midst of, allowing our longer range moving average to come up, that being the 200-day. It's still beneath us by a couple hundred points, 250 points to the downside, but on this particular space, this particular group, But 250 from our space here, from really what we're looking at, is about 5% to the 200-day moving average. And so technology from the trend standpoint is not giving trend traders a whole lot to work with. And so it does not make it to the scan list right now. Unfortunately, for a lot of you traders out there, you're trying to grapple with, where do I go when technology is not the leader? Well, that's exactly what I think this class is going to discuss very much as we continue to move forward, because our portfolio, we're going to be trading the trend. We're going to be going with the groups that are working. We're not fighting uphill battles here. We're trying to make it easy on ourselves. So with that in mind, I spent a pretty good part of today's pre-work here to look through energy, to locate a series of individual stocks that can do very well for us. And I think what we're going to find is that it's going to take a little bit of discipline to not trade every good-looking chart, because once you start finding them, the exuberance of finding a positive or bullish chart is that you want to play them all, and we're going to need to be a little bit disciplined. But let's go ahead and take a look at what I've been basically spending my time on is the personal list, uptrending, and in energy. Okay, so that list has been built out, and I'll remind you, the way that is working is I just built this as a scan. So if you are in the recorded or the archive version of this class, open up the show notes beneath you. You're going to see that we've got a script in there for uptrending in 3 different time frames, that being the 20-day, the 50-day, the 200-day moving average, in the NASDAQ, specifically the NASDAQ 100, and technology. But remember, you don't have to stick with that. That's how it's created initially. Just changing the scan in drop-down tool. So when we're here, for example, NASDAQ 100 technology, we can just change this to, for example, S&P 500 and any of your groups that you want. So in this case, it's energy, but if you're wanting to create not just an individual scan, but you also wish to create a watch list that is dynamic, make sure you make your updates and then save the scan query so that it becomes one of those watch lists. And again, when we're searching for them, they're always going to populate under your personals, and they're always going to show up with the target, the pink target. That's how you know you've got a dynamic watch list. Okay, so that's all I've done. And Zink, you're right. In fact, I posted and discussed Devon Energy today. Posted it on Twitter. Looked at that chart quite a bit today. There's a bunch of interesting looking ones here in energy. In fact, let's just work our way down the list. I will tell you up front, I've got one picked out, but I wanted to talk a little bit about a few of these because, again, I think what you're going to find is you're going to find bullish patterns here. I mean, Valero, certainly with an uptrend that's been in place, right? We've been holding an uptrend line, holding a 50-day moving average. It's gone sideways in here for about 14 points for about the last month or so. And it's dabbling with a breakout. Had a really nice move today, but didn't quite break. So you're maybe patiently waiting for an outright breakout as validation. You don't like to buy at resistance because the risk is we get pushed back from there. But if you get a close at a new high there, sure could work out. Potentially could work out, obviously. Many traders are waiting for that new high close as validation for the trend, and that's why they would be patient, wait for that close. Yes, I can share that scan with you. Let's go ahead. I'm just going to make it the energy one, so I'll just load up my energy, all time frames. There we go. And then I'm going to share it. I'll put that in the chat for you guys. Please remember that when we share these scripts, these are not guaranteed for accuracy nor not guaranteed for timing. Again, this is SPX Energy Uptrending. There you go. And I've titled it Uptrending All Time Frames, but again, it's just trending up above the 20, the 50, the 200-day moving average. Does not have an earnings announcement in this one also anytime in the next 30 days. So that would kick a few out. Just be aware of that. If you wanted to eliminate that, that's real easy. You can just hit the X and resave. Okay, I wanted to move our way down the list. Again, many of these are going to be very interesting for you. As you can see, this one, Marathon, holding the 200-day, today's low coming in line at the 200, and then basically finishing at a new 6-week high. That's positive. Some traders would tell you that you also have a broken downtrend line, which may be the first opportunity to participate in a continuation of an uptrend with a broken downtrend line. So a lot of traders like to maybe step in with a portional trade, a portion of what they ultimately would like to get started, and they might do that right there. What else do we have here? Phillips, that's a new 52-week high, it looks like. Let's take a look at ExxonMobil. Something similar, right? That 20-day might be a little slow. Maybe it's a 10-day on Exxon, which has been, boy, I could certainly validate a trader maybe looking at this and saying, yeah, I'll take a trade here with a very tight stop under the 10-day moving average. This is interesting because look at the volume. Big spikes as it's moved to new highs here. That's not a negative. Okay, so that's certainly validating this breakout, and I think these are new all-time levels. So yeah, moving to new all-time highs in Exxon. Yeah, from 121 where it really just pushed up. Now you're up 20 plus points from there. So really nice start. That's nearly, let's see, from 120, 24 points from there would be 20%. So yeah, it's up about close to 20% just after the break to the new highs. Not too shabby. What about Williams in here? Again, you're finding that a lot of these are going to catch your eye. Williams at a 52-week high. Oxy pushing off the 20-day. Looks like solid support at the $43 area here, an area under which some traders maybe set risk. You've got Halliburton with a pullback to the 20-day moving average, holding the 20-day moving average back to mid-November there. Conoco pushing into a potential 52-week high, not too far off. Baker Hughes breaking a bull flag. Diamondback, similar, breaking a bull flag. This one's also interesting, everybody, because where are we in relation to the 200-day moving average and the broken downtrend? This stands out because traders are looking to catch these trades early on in development. And in fact, that's exactly why we're going to look at the example trade today is on One Oak. OKE is the ticker symbol. Now, I looked this up. I want you all to know I looked it up with the company. It is One Oak, not One OK, no matter how I've been saying it in the past, or Aniok, or anything like that. It is One Oak, evidently. So I'm learning something. And what I noticed about this one was the recent move above the 200-day moving average in blue, and the throwback to the 20-day, and then today's big candle. So what is it about today's big candle that we like as bullish traders? It's the close above the high of the low day. So in this very brief pullback that lasted from the intraday high we would have made on Thursday of last week, which was up there at 81.43, we pulled back to the 20-day moving average, which was a low at 75.29. So about a $6 sell-off. Not huge, but just to the support. And then today we got a really good bounce. Something else that occurred to me, look at the volume once more. Expanding in the break to the recent highs and in the pullback to support. And then today you had good volume with it as well. Now, what's interesting about this is that in a class like this, where our goal is to develop new individual equity positions, we may have caught one at the beginning stages of a new bullish uptrend. And so if that's the case, well, then we have an opportunity potentially to be in a position longer than we might normally. So we're going to take an example trade here with an exit strategy based against the 50-day moving average, which, according to my little notation here, is 74.03. So how are we going to build this out? Before I get to it, I want to thank Connie for reposting that survey there in the chat. Thank you, Connie. Love to hear from you all. I heard from you all last week. Your feedback is always invaluable to me. One of the things that I'm trying to do is to slow down my process a little bit. I'm not great at slowing down, but I'm trying to. So if I go too quickly through some steps that are important for you, please note that in the chat, and I'll try to revisit and take a step-by-step once more for you, because I know that sometimes that slowing things down can absolutely lend a hand here. In the case of ONEOK, yes, Jay, we do have earnings coming up. Our hope is that the earnings are not going to dramatically shift our trend. It's possible, but we're still going to build the trade out as though we're not going to overdo our trade, right? We're going to do it up to our full position, but not beyond it. So let's bring in our scratch pad so that we can quickly verify our details. So that means our full position should not exceed $10,000, but also our risk for the trade should not exceed $1,000. So with that in mind, if we are to be buyers at, let's say, as much as 79 with an exit strategy under 74, well, now we're risking $5 a share, but we got to risk a little bit less than that, or pardon me, a little bit more than that, because we only want to get kicked out of the trade under the 50-day moving average if it appears as though we are really breaking down. So for some of us, that would be the use of the average true range. So I'm going to add that in here. Down below, you can see that number is $2.23. So I'm just going to take that from our 74.03, which again is our 50-day moving average, and reduce it by 223. 2.23 means that we need an exit at 71.80. Okay? So if we buy at 73, and the reason I selected 73 is to increase our chance of execution, because again, market's closed, we have to do a padded limit. I say that because last week we tried to buy on semiconductor, which we're going to review momentarily, and it didn't work because I gave a padded limit and the stock gapped above my padded limit, and then it missed the opportunity. So in order to get into the trade, we've got to give a little bit of a padded move. So according to entrance at 79 and a sell at 71.80, we'd have to take on about $7.20 of risk. So with that in mind, I take my $1,000, which is my maximum risk tolerance, and divide it by 720, and I can have a maximum of 138 shares. But 138 shares at 79 exceeds our total investment dollar for a full position by about $900. So we're going to decrease the number of shares, and we're going to go down to about 125, which will keep our investment for this position under the $10,000 maximum. And with our exit strategy, if we get executed close to our stop, which unfortunately is no guarantee, then we would be working to limit our loss to not exceed $1,000. So that's what we're going to strive to do, even though we can't guarantee it. Those steps are important for our risk management and trade management process. So here's how that's going to look on the board. We're going to go ahead and hit with buy custom with a stop. We will line these up so whatever changes I make to my buy is going to apply to my sell. So 125 for purchase at a limit price not to exceed 79. That means that whatever we buy, we're only buying as long as it's $79 or less. And then our exit strategy on a stop is down to 71.80. And you know what? Let's go a little bit below that. Let's go down to 71.76. And that gives us a little extra wiggle room just for safety, right? And while our limit for purchase is good for tomorrow's day, we're going to make this a good till canceled exit, right? Just so that we are comfortable carrying this over multiple days. Giovanna, I've tried buying these in our example portfolio here, utilizing the paper money, and for whatever reason, I can't force the extended hours to work. So I have in the past tried to just put ourselves into the trade so that we can start managing it right away. Unfortunately, it's not going to give us an execution in the extended hours, which is an annoyance for me because I would much rather, especially if the price is right, get us into the trade, and then we can start managing it immediately. Unfortunately, that's not been the case. So that's why we're placing it for tomorrow's business. And a lot of you are also maybe unfamiliar with trading after hours. It's just a slightly different process. But I think by carrying the conversation and covering it from a standpoint of with the way many traders work, which is they do their normal jobs throughout the day and then they spend their afternoons or evenings reviewing the broad market, checking their portfolio, making changes, etc. Hopefully this is helpful for those individuals. Okay, so buying 125 with an exit strategy below to mitigate our risk. No target just yet. Let's go ahead and place that for tomorrow's business. And again, we're just looking not to exceed $10,000 on our purchase there. So that gives us something that's in line with our approach for this particular account. Now, let's see. Good question as well, Peach. Do I incorporate a conditional close? That is to say, do I want to see a timing associated with this? Meaning, am I looking at this in the final 5 minutes of trading? So instead of buying immediately at market open, as long as I'm under the limit, do we want to see a purchase closer to market close? Maybe some traders would do this. It's not a negative or a bad way to go about it. But in our case, because of what we've gotten in this case, in this particular shares, with the close above the high of the low day today, we're going to use that so-called hold as validation for this new uptrend continuing. We believe that that's going to maintain. We're taking steps so that if it doesn't, we mitigate our risk. But because of that close above the high of the low day, we're going to roll forward with the belief that it's already in play. Doesn't mean you can't use it though, Peach. I think it's a perfectly appropriate question, and we will periodically utilize the conditional detail like that. Timing, final 5 minutes, especially, I would say in my experience, the instances in which I've utilized that has been much more likely on a breakout trade, stock moving to brand new highs, for example. I want to see that at the close of business. I want to see through an area of resistance on a closing basis. Okay, where are we in time? Yeah, we're not too shabby to get us going here on OKE, but I want to make sure that we look at the example portfolio. So last week we tried a trade on semi, and unfortunately it just didn't hold. The stock, we missed our limit purchase and it rallied and then it threw all the way back. So, if we were looking for exposure to tech, exposure to semiconductors, in theory, we could look in this one, but we didn't get the trade put on. We're going to move on from semiconductor, no pun intended there. What we are going to do is take a look at the example portfolio though. So let me pull this up. Notice our OKE position ready to go for tomorrow's business. Now let's talk about the skunk at our picnic proverbially here. That's Credo. Now, if you've been here when we made the Credo purchase, you would say, Kevin, this is exactly how I thought it was going to play out. And to this point, you'd be right on the money. If you recall, we talked about being a buyer back here a couple of weeks ago at an area of support. We placed the purchase, we got put into the trade, and then we got immediately executed on the sell side as well. And through frustration, the following week, we put the trade on anyway. We bought it. And I hope the takeaway now is that by buying it because we missed the original trade, that was a terrible decision. Okay, that's the takeaway on this trade. We have put ourselves in an opportunity to take a bigger loss than for which we have comfort. We are already down approximately $1,500, which already exceeds our comfort for loss by $500 almost. So to tell you that I did this with the intent of proving to us why we don't want to do this, That's probably not fair. I'm sure I really wanted this to work in our favor, but it is helpful, if nothing else, to be reminded that we need to be more disciplined than I was when I placed this one. Okay. We do have a stop order in there. We are protected. If it closes under 101 or trades to 101 and takes us out, then so be it. But we're not making any adjustments to the Credo trade. Just know that I'm very disappointed in myself. Very disappointed that we even just put this one on at all, because again, we missed the trade and we should have moved on. That's what it would have been. So shame on me for revenge trading or whatever you want to call it. Just hopefully the takeaway is that's not the way to do it, right? We got to stick to our guns. We got to stay disciplined. This was not one of those disciplined scenarios. So, all right, how about some adjustments where we can? So let's talk about Tyson, TSN. We got into Tyson a couple weeks back. This one has been moving in our favor. We've got the trailing 20-day moving average catching up. It's still a little bit slow. Exit there is $3 beneath where we are, which would be about 5% lower. So, the question is whether traders can stick with 5% to the downside and they want to work with the 20-day moving average. They can. Now, our current stop here is at 59.42. And with a quick look at our ATR, let's put that ATR back up, of $1.52. If we wanted to still work with the 20-day, we're going to have to raise our stop up to about 59.80. And again, the math on this is taking the 20-day moving average, 61.34, less the amount of the ATR of $1.52. So I'm going to do the math on that for you. 61.34 less $1.52 is 59.82, and we are currently at 59.42. So we're going to raise our stop by 40 cents to 59.82, replacing. All right, good. Go ahead and hit send. And now we've got that one ATR beneath our 20-day moving average. That's our management process on this trade. If it continues to run, we'll continue to elevate, right? So yes, we at 59.82, let's just check this out. I think, yeah, we would still be in a loss. Okay, so our entrance was 60.21, but we have now worked to mitigate our risk down to about 40 cents a share. And so if we were to be out on the 100 at our stop, of course, we can't guarantee that. Remember, that's a market order once triggered. We'd lose about 40 bucks. That's a really fine trade. We've admitted we'd be comfortable risking as much as 1,000, but it's not by any stretch absolutely necessary. So where we can mitigate that risk, we should look to do so. And that's exactly what we've done here today by raising the stop there. Now, our winner, if you will, in this particular portfolio is Caterpillar. It is doing quite nicely for us. Here we bought in at 624.25, and we're up to over 700 at the close today. And we do have an exit strategy, but we're also going to need to raise and elevate that stop. So let's get Cat in there, everyone. Now, and here we've got Caterpillar at a stop of 577.94. We need to elevate that because, as you can see, we've traded to a new all-time high there, 710.03. And again, we're looking at our current 20-day moving average, although, excuse me, not the 20-day. In this case, Caterpillar, we've been working with the 50-day, as it turns out. So I'm just going to apply only the 50-day. And then I'm going to reapply the ATR so we can see it. It's 1992. And so at the close today, 606.65 is our 50-day minus 1992. 586.73 becomes our new approximation for the stop. And so now I'm going to do this as well. I'm just going to push this up, but I'm going to show you all. I think you saw originally the last time I did this, I just simply pushed it higher, right? Click and drag. You can also right click in here, cancel, replace, and we're just going to make the adjustment right here. So now our stop is moving up to 586.73. 3 still remains good till canceled. And again, we were at 578 approximately. So we're picking up about 8 points of upside by increasing our stop level this way. Again, can't guarantee that when we sell, we will sell at our stop or even near it because we have gap risk. So if by some chance the stock was above 586.73, opened the next day at 550, that open trade at 550 would trigger us, and then we would be executed at the next available market price, much closer to 550, not so close to 586, according to my example. So please keep that in mind. All right, so we're going to elevate the stop there. All right, so we have made some adjustments. We are looking to add trades to the example portfolio. We do have a couple of minutes remaining, and one of the other ones that caught my eye but was a little different, I will admit. Remember, we talked OKE because of its presence relative to its downtrend, and that if we are right about the downtrend changing to an uptrend, well, then we are in at a very early window relative to the trend. But one that caught my eye today was Schlumberger, and I thought, let's also incorporate this if we have time. So this is going to be quick. We're simply going to look at the 20-day. We're going to incorporate the ATR. $1.50 below the 20-day from 47.21 is going to be our exit strategy. Okay, so 47.21. Oops, if I can get my fingers to work here. Minus the $1.50. So that means a stop exit about 45.71, and we could consider buying. Let's talk about it, just 100 shares, which would be half of our position size of what we would normally look for. And we're going to go up to make a purchase as long as it's less than $50 a share. No guarantee that's even going to put us in the trade there, everybody. So we'll do a quick buy custom with stop. We will do limit for tomorrow's day, not to exceed 51. And then our exit will be a stop at 45.71, good till canceled. Again, no guarantee of the 45.71 maintaining. But what stood out to me on this one, everyone, was really just the beautiful uptrend with it. And then today, again, pull back to the trending moving average, the 20-day, and a hold move with today's price action. So that really stood out to me on the chart, and I'd say that a lot of traders would suggest that as long as the 20-day maintains, you've got every reason to think that you can manage this with more upside. But we'll see if we can get that one to work out for us, everybody. So I'll put that one on the table for next week as well, and then we'll reconvene next Tuesday and see if we don't have 2 new positions in energy, which is a space that we didn't previously have, but being the leader that it is this year to date and all of January thus far in February, it might be one that we need to consider. So with that in mind, everybody, I want to thank you for being here today. Thank you for participating in the show. Make sure you are subscribed to the Schwab YouTube channel known as Trader Talks. Follow Connie and me both on X, Connie Hill CS, Kevin Horner CS. And if you like the conversation today, hit the thumbs up button for me down below. We're going to get this one reviewed and into the archives for you as quickly as we can. And that thumbs up button really helps us out in the YouTube algorithm when we get this out there for the replay. So as always, thanks for being here, everybody. Don't forget that survey is available to you as well. Your feedback is very important and helpful to me, and I will try to incorporate that as we move forward as well. You can just click that link and offer up any comments you might like. They all come to me directly, and I'm more than happy to read them from you. So thanks for being here. Have a great rest of your Tuesday, everybody. I look forward to catching up with you again real soon.